Hello friends, I am CA Niranjan Joshi. SSB of ICI has started this initiative of digital learning, and today I am going to take you through Standard on Auditing 580 Written Representations. The standard talks about obtaining written representations as audit evidence from the audit clients. Primarily, we all know that management representation letter is obtained at the time of concluding the audit. However, one may go through the entire standard and understand that apart from this management representation letter, there can be additional representations obtained from the management. The introductory para talks about scope of the standard, talks about the written representations as audit evidence. The effective date is 1st April 2009. Then the objectives of the standard, then certain definitions, and then the requirements mentioned in the standard talks about management, the definition of the management from whom the written representations are requested for. Then the written representations containing management responsibilities, whether they have been discharged properly. Other representations, then the date and the period for which the written representations covering, and a format of written representation, and any doubt on the reliability of the written representations, whether requested or not provided. Let's go through the standard quickly. The scope talks about auditor's responsibility to obtain written representations from the management and from those charged with governance wherever appropriate. Typically, in case of smaller clients, we would observe that management is nothing but the owners, the proprietors, the partners, or the directors of the private limited companies. As the auditee grows large, it may impact the requirements of having those charged with governance like CFO and CEO of the organization. Similarly, depending on the nature and type of audit, those charged with governance may also include, like in case of if we are appointed as branch auditors, then the branch head or the in charge for preparation of financial statements at the branch also may be incorporated in the definition of those charged with governance or management. So primarily the standard talks about the requirements from taking or obtaining written representations from the management for conduct of your statutory audit. Written representations act as an audit evidence, but not necessarily it may be a sufficient and appropriate audit evidence. Meaning thereby, during the course of audit, the auditor obtains evidence to support its view at the time of issuing an audit report. That becomes a sufficient and appropriate audit evidence. However, wherever responses are expected from the management, they may come in the form of written representations, and that can be treated as an audit evidence. However, it may not be sufficient appropriate audit evidence for concluding audit. The written representations do not dilute auditor's responsibility to obtain other audit evidence for the matters covered by written representations. Meaning thereby, for example, if the written representation talks about a certain type of item appearing into the financial statements, that doesn't suffice the auditor. However, the auditor will have to obtain additional evidence based on the testing which it carries out during the audit. Management modifies or does not provide the requested written representations. There may be a possibility of existence of one or more significant issues, and in such scenarios, the auditor will have to modify the audit program, modify the testing of that particular item, modify the testing of that particular significant issue involved, and redraft the questionnaire and send it back to the management for their responses. The basic objective of auditor obtaining or requesting for a written representation is to support the other audit evidence gathered during the audit process. Wherever the management or those charged with governance have fulfilled their responsibilities with respect to their financial statement preparation, the completeness of the information about the internal controls the information about any other matter significantly impacting the financial statements has to be mentioned in the written representations. The written representation provided or may be refused by the management have to be appropriately responded by the auditor. In case if the written representations are provided, the auditor would have to verify the correctness of that and has to verify whether it is supporting the other audited evidence which is gathered during the audit process. In case the management refuses to issue a written representation, the auditor may have to verify whether the written representation's refusal is impacting the audit conclusion and may appropriately draft the audit program or suitably modify the audit program, maybe suitably modify the request questionnaire and resend it to the management and wait for their further responses. The extreme case would be in scenarios where the auditor is not able to obtain the written representation, the auditor may think for even withdrawing from the assignment. Written representations are defined as any written statement by the management provided to the auditors to confirm certain matters or to support the audit evidence. In simple language, what we all understand is that while concluding an audit, we obtain a management representation letter, and we all believe that MRL is the only letter which is a written representation which is opted. However, there are many other written representations as well. We'll discuss that in some other slides. However, one has to remember that written representations do not include the financial statements, the assertions therein, and the supporting books and records. So written representation would be a written statement by the management provided to the auditor, addressed to the auditor, specifying and confirming certain matters which would support the other auditor evidence gathered during the process of audit. The management from whom written representations are requested are the people who are having appropriate responsibilities for the financial statements and those who possess knowledge of the matters concerned. In simple language, what we understand is the CEO and the CFO, the Chief Executive Officer and Chief Financial Officer, are primarily concerned with running of the business and maintaining appropriate books, appropriate financial statements as per the financial reporting framework. So we can term them as responsible parties who are termed as management, with whom or from whom written representations are requested by the auditor. Again, they will depend on the governance structure of the entity and the relevant laws and regulations which are governing that particular entity. Sufficient knowledge of financial reporting processes is a must for those to be tagged as management. Those charged with governance may also be responsible for preparation and presentation of financial statements, and management may approach relevant experts like an in-house legal counsel, or maybe an actuary in case of a specified business, or maybe some technocrats like engineers who are part of their organizations who can also be part of management. Similarly, in case of branches, typically the branch heads would also have this kind of a dual role at a smaller level, and in case of branch audits, one may not reach those charged with governance of the entity as a whole, but restricted to that particular branch, they would be termed as management. Again, management's use of, to the best of our knowledge and belief, in written representation is acceptable if auditor is satisfied that such statement made by those with appropriate responsibilities and knowledge of the matter. If not, then auditor would have to ask the management to give a clear written representations without having these words. Auditor may also request management to include in written representations confirmation that they have made such inquiries and it may considered appropriate to give this written representation. Written representation about management responsibilities may include, preparation of financial statements like compliance with the applicable financial reporting framework. There are certain types of industries which have got specific regulations Information provided and completeness of transactions is something which is very important in case of management responsibility embedded in written representations. The management has provided all relevant information and has provided access as agreed as per the terms of audit engagement is something which is a must and a part of written representations provided to statutory auditors. All transactions recorded and reflected in financial statements have to be also mentioned in the management representation letter. Further, description of management responsibilities also should be elaborately mentioned in the written representations provided to auditors. Some of the other forms of written representations may be termed as additional written representations may include, like for financial statements, selection and application of appropriate accounting policies, giving justification for what are the basis on which some policies have been drafted and followed by the management. Recognition, measurement, presentation and disclosures in financial statements according to the financial reporting framework, like say carrying value of assets, correct value of liabilities, title and control over the assets which are in the books of accounts, compliance with relevant applicable laws and regulations, and so on and so forth. Further, an additional information provided to auditor may require the management to confirm that management has disclosed all known deficiencies in internal controls to the auditor, and also to some extent the mitigation processes followed by the management to overcome such deficiencies. There could be some specific assertions also mentioned in written representations other than the normal management representation letter. It includes management's intentions, management's judgments, standard procedures followed by the management with respect to preparation of financial statements. The auditor has to communicate to the management for the purpose or the threshold for the written representations, also to those charged with governance, and the written representations of all these specific items should be requested from the management by the auditors. What should be the date and period covered by these representations? The standard suggests that the written representations should be as near as practicable to, but not after the date of auditor's report. Meaning thereby, auditor is expected to get these written representations from the management near about the date on which they close their audit and issue a audit report. Sometimes it happens so that auditor may request for written representation during the course of audit, and as the conclusion or as the end of the audit approaches, the auditor may request the management to issue the representations again, modifying the latest position regarding those particular items. So we have to remember, friends, that the written representations as far as possible should be nearest to the date of closure of audit, but in any case it cannot be the date after the audit is closed. For all financial statements and periods also needs to be covered similar to those periods which are covered by the auditor's report. Sometimes it happens so that more than one financial year is covered by the auditor's report, and in that case, naturally, the management would have to give written representations for all those periods which are covered in auditor's report. Sometimes it happens so that there is a change in management during the audit process. But this change in management does not diminish their responsibility for preparing financial statements as a whole, and the auditor can request from the new management a written representation that covers the whole relevant period covered by the auditor's report. The management in their written representations, the new management in their written representation may inform the auditor that they have taken over recently, however they have gone through the entire period's financial statements and they are giving this written representation. The form of written representation could be primarily a written statement, signed copy by those charged with governance or by the management. it should be addressed to the auditor. The written public statement about management responsibilities, if required by law and regulations, may also facilitate the auditor to take a note that these are additional written representations. But auditor will have to consider that the public statements made by the auditee includes all matters covered in terms of audit engagement, and it is made by the persons whom auditor is requested to give written representation, and a copy is provided to the auditor before or near about the balance sheet date, before or near about the date of audit report. The expression of management responsibility in law or regulation cannot be a substitute for a written representation as expected by the auditor as per the terms of audit engagement. So auditor will have to carefully examine and study these written public statements. If they are not covering all the required information which is required by the auditor, then a separate written representation as addressed to the auditor must be obtained. If the auditor has any doubt on reliability of the written representation, the auditor may raise such concern to the management regarding the integrity and competence of the written representation, determine the effects on the reliability of the written representations as an audit evidence and with respect to the financial statements. Extreme situations may ask the auditor to withdraw unless a corrective action has been taken by the management and those charged with governance. But in this situation, the auditor cannot issue a clean report and a modified opinion has to be issued by the auditor. Written representation inconsistent with the other audit evidence may also warrant an auditor to further enhance the audit procedures to resolve this inconsistency. Further audit procedures to resolve this inconsistency and consider the management competency and integrity regarding preparation of this written representations. Further test the adequacy of risk assessment involved in that particular item and determine the effect on the reliability of the written representation as a whole. An auditor has to document the reasons why the written representations are not found reliable in case of issuing a modified or not a clean report. Requested written representations, if not provided, the matter has to be discussed with the management or those charged with governance, re-evaluate the integrity of the management, evaluate the effect on the reliability of the representations and audit evidence as a whole, and take appropriate action including possible effect on audit opinion. The written representation is nothing but a management responsibility, and in case warranted, a disclaimer of opinion may be given if sufficient doubt about the integrity of the management is such that written representation with respect to the aspects of preparation and presentation of financial statements and the information required by the auditor to be provided to the auditor is not obtained and not reliable, or in case the management does not provide written representations. Thank you.